Assalamu alaikum. Uh, Welcome all to the corporate briefing for Pakistan Oxygen Limited. We will be taking you through a short presentation, after which we'll be open for questions. So if you have anything you need to ask while we are taking through the presentation, please hold to the end of the presentation. Uh, I would like to begin with the a short disclaimer. This is very critical for the information that we do share. Please remember that we are limited in the information that we can provide to you. So I know some of the questions that you may have may require some more in-depth uh, information. However, we are limited by practice and law not to share anything that's not been disclosed. So please try to remember that all our answers would be limited by that. So very quickly moving on about the company. We are more than 90 years old, established in 1935, and we are uh, a leader in the industrial and medical gases segment, and also in the equipment and welding products. Our oxygen is compliant to European pharmacopoeia standards, uh, due to which we are the first choice suppliers for all top hospitals in Pakistan. And we're delivering to more than 300 hospitals across, and also to other industries. We are also the industry leader in our medical engineering installation services, which is basically a segue into this business. In 2023, we commissioned a state-of-the-art 270 tons per day air separation unit uh, in Karachi. This is the only Linde plant outside the Linde world. So this is something which we both pride in and benefit from as management shareholders. We've also announced significant investment into a hydrogen plant, an electrolyzer plant, for which the procurement process is underway, and we hope to uh, have this ready by the proposed plan. Uh, the company, as I said, started in 1935 with the Indian Oxygen and Acetylene Company, and it has gone through various permutations with the same name, but the business has remained very much the same. We have added certain segments to this during the history of the company. So in 2006, the Linde Group globally acquired BOC, which was the previous owner. And then towards the end of 2017 and early 2018, when Linde entered Pakistan, the current ownership was transferred to a consortium which was back then led by DIRA, and the company was renamed back to its name of Pakistan Oxygen Limited. Uh, since then, we've also gone through in the period since the acquisition, we have added more to our footprint, including, of course, what I mentioned, the 270 tons per day ASU, and 11 tons per day electrode plant. And now, as I said, in 2025, we announced the 500 meter cube of hydrogen electrolyzer plant as well. What is more interesting for us, because this is an addition to our portfolio, is in 2024 we launched Quick App, which is Pakistan's first low code, no code platform. And I'd just like to take you through the journey so far. This is something that's very different from our conventional business. So the premise is that this is uh, a platform that allows organizations to build their own apps, and very very quickly. When we set off, we were in this market for the first time. However, through our own efforts and very highly efficient teams, and the way we've expanded, now we've got capabilities that we've added to the platform, We have so far more than 16 customers, and adding to this, these are both local and multinational customers. We have more than 50 templates already built and also more than 100 proof of concepts. What that basically means is that any organization that wants to automate its workflows while integrating it to their respective ERPs can do that without needing to add any specialized programmers or coders for that. We have also recently added the AI builder to this, which facilitates the process even more, through which just by writing prompts, we provide customers the ability to build their own workflows. We now like to take you through a short video that explains the platform.
Technology has transformed our world, changing the way we work, operate, and communicate. In the past, building even a simple application was challenging and limited to those with coding skills. But what if there were a simpler way? Introducing Quick App, a platform of limitless possibilities where automation meets simplicity. Quick App empowers both technical and business users to automate workflows and build business applications without writing code. Our low-code, no-code platform provides a smart drag and drop feature, allowing you to create and deploy enterprise-level applications up to 60% faster. And now, with Quick App AI Builder, building business applications is even simpler. Just describe what you need, and Quick App AI Builder automatically generates your application, workflows, approvals, and process visibility in seconds. From forms to workflows, everything is built intelligently and ready to integrate with your business operations. It integrates seamlessly with your existing ERP systems, including SAP, Oracle, and Microsoft Dynamics, enabling custom workflows that are otherwise difficult to build. Quick App grows with your business to meet its changing needs, and our reliable support ensures a smooth journey from setup to go live. With over 50-plus pre-built templates, including master data management, gate pass management, audit tracking, and many more as per the business requirements, and 100-plus proven use cases across various local and international industries. Our solutions are built to address the specific needs of each industry, complementing your ERP by enabling advanced workflow automation. Ready to automate your workflows? Quick App is just a click away.
Thank you, Sue. Yes, now moving on to our financial year 2025, the company now boasts a very healthy balance sheet with total assets of 21 billion rupees. The recorded sales just over 13 billion for the year, and the company's net worth, net of liabilities, is now 21 billion. 12 billion. We also have 1,500 plus customers across Pakistan. As far as the industry is concerned, we have the largest footprint in the industry, covering the entire country. We also have integrated supply, and one of the key differentiating factors for Pakistan Oxygen has been our safety, health, environmental quality standards, where, despite the fact that this is no longer part of the Linde world, but we've kept up to date with all the standards, which then differentiate us from our other players in the market. We maintain all our global certifications. I've already touched upon a little bit about the state-of-the-art plants that we have, and we also have a team of about 150 people in our organization, the full-time people. As far as the national footprint is concerned, we have ASU plants in Karachi, Port Qasim, and Lahore. Then we also have 2 electrode plants in Port Qasim, producing net of about 17 tons per day of electrodes. Other plants include the hydrogen plant in Port Qasim. We have a nitrous oxide plant, and we have dissolved distilling plants in Karachi and Wah. And on top of that, we also have an on-site nitrogen plant for the refinery at North Court. Geography is such that we have presence across Pakistan. We have sales offices and depots And our delivery network is also quite strong with 260 VIEs and the vehicle fleet of 43 VIGTs. These are vehicles that provide the gases on site. And we have what, the capacity to store is also significantly almost 1.2 million meters cube of oxygen storage possible. Uh, Moving on to yes, the business segments. Our core remains our industrial, medical, and other gases. Our gases business is about 87% of our top line. And in this, we can share that, Pakistan Oxygen is the market leader in both these segments with approximately 38% market share. We do have the largest national footprint, and our oxygen supplies are supplying to the European pharmacopoeia. Uh, we serve customers of all sizes and scales, from small retail customers with cylinder usage to large refineries and others in both the medical and industrial segments. We are the sole producer of commercial hydrogen in Pakistan, and we have also engaged with the IFC for the national hydrogen strategy for future development were that to rise. We are the pioneer and medical leader in the medical engineering services segment, and we've also indigenously developed our own medical equipment, which we have already supplied to some major local hospitals and where we see potential for growth in the future as well. We also have strategic alliances with leading global healthcare equipment partners. Uh, so wherever there is any need for branded equipment, again, Pakistan Oxygen is the organization. Our portfolio includes for the industrial gases, liquid oxygen, nitrogen, argon, and carbon dioxide. We also have the pipeline trailer availability of hydrogen as well as dry ice. In the medical gases segment, we provide liquid and compressed medical oxygen, nitrous oxide, Enterox, and specialty medical gases. And we also have, for compressed and specialty gases, we have a host of other products that are available. So we basically provide a single stop solution to all the gas needs that may arise in the industrial and medical segments. What I referred to earlier, the medical engineering services. So this starts with the design of wherever there is a new hospital, let's say that's coming up. At the very design phase, once the grayscale structure is complete, companies and hospitals reach out to us to help designing their network for gases supplies. And then from then on to the engineering and installation, we are providing all the end-to-end solutions for that. Um, uh, Recently, we've also added to our portfolio, providing import substitution, and we have now indigenously produced a significant array of medical engineering equipment, which is available for both local and export markets. In the welding segment, which is about 13% again of our top line, we we tend to deal in the entire portfolio. So we've got the high end tier one mark products, which are essentially brands representing ESAP, which is a global player, and from then to the very low end, we've got our own brand as well. So we're catering to the welding needs of all sorts of industrial and retail users. This business combines very well with our strategic portfolio of gases. So wherever there is need, we can provide both the welding equipment as well as material and the gases to help that segment. The financial performance, very quickly, just a recap of what we've discussed. You can see that our top line has increased a very healthy 15% over 2024, with significant growth in our gross profits, which have increased by about 71%. We have kept our overheads very much under check. Again, something that the management prides in. Our operating profit for the year grew by, thanks to this, a whopping 90%. So we literally doubled our profits within the year. You can see that our finance costs are halved. This again is through the stewardship of our finance team, where through our effective treasury management, we've managed to pay off all our long-term debt ahead of schedule. And this coupled with the decrease in our in the interest rates in 2025, we've seen significant drops from almost 1 billion rupees paid in 24. We're only about 183. So again, very efficient. You can see that there's a very large increase in our tax number, because before tax and after tax is this is because again, uh, with the late court decision on super tax, we absorbed all the you know the impact of both super tax as well as the deferred tax impact from that. The company had the profitability to sustain this, and we believe that we have future proofed ourselves to any shocks, and rather than trying to while things away, we will continue to be transparent in this. But in spite of this late shock to the system, we have still more than doubled our earning per share, uh, clocking about 19.2 rupees for the year. Uh, we also maintained our very high standards on safety, which something we always take pride in. Um, the gross profit improvement is thanks all this thanks also to our better than design SPC achievement. So Linde had designed this plant at a certain SPC. However, our team through its management has delivered better results than even the design. So this is why you'll see that our efficiencies are translating into our gross profits. We maintain our leadership position in the hydrogen market, and continue to introduce new products in the MES and welding. So far, it's about 130 million, but again, this is something we are looking for the future. Uh, a very quick snapshot of the quarter. So I know we've gone deep into the second quarter for 2026. So very quickly, we continue to have similar trends as the full year. Our top line has grown by 23%. Again, this in spite of all the challenges that we see in the economy and industry. This is very healthy and heavy, reflective of our performance. Our gross profit, again, reflecting our efficiencies and pricing discipline, have increased by a very significant 58%. And this then reflects back into all of our, financial parameters, with a very solid, almost 8 rupees of earnings for one quarter uh, in 2026. Looking at some of the ratios that come out of this, you can see that for 2025, we have outdone our historic performances, and we've looked deep into it. So this is 2025 is, for the 9-year history, our best ever in terms of most of the parameters that you see here. So we have a very solid return on capital employed, 26%. Our return on equity is again 16%. Paying off our long-term debt, our debt to equity is again very manageable. What you see is debt is predominantly our turf loans, which are the low rate liability on our balance sheet, which we're happy to continue with. Total debt to equity, again, taking into consideration some working capital financing, is still very, very significantly in our favor. Our current ratio has also uh, bounce back from the struggling times that we had earlier in the years. And thanks to our strong profitability, our interest cover is very significant. Touched upon the total assets about 21 billion rupees with a net equity of about 12 billion. And the debt 4.3 is the majority of this or a big chunk of this is turf dominated. Um, just a quick graphical representation of how you can see the progression in our sales and operating profits and of course our gross margins and PAT. Um, the dip that we saw in 2023 is when the company had certain expansion plans, and now as those plans have materialized, you can see that this company has um, you know shown very significant results and continue to do so. With that, we conclude our presentation, but we will open our cells for any questions. Please remember that we are bound, as just to remind everybody, that we will not be able to answer too many questions that are futuristic in nature because we need to stick to what's being presented, and also anything that's not part of public discourse will not. So please go ahead, and I think we can take questions. So as aware, I think I see a raise hand. If you please ask a question.
Can you hear me?
Yeah, please.
Thank you so much for providing the opportunity. Uh, Basically, I have a few questions. If I can ask one by one, or you want me to ask once and for all?
No, please. Let's take your questions and we'll note them and answer them. Please. So that's your
Okay.
question.
Okay. Firstly, you mentioned that the 87% of your uh, top line comes from the gases business. Can you basically elaborate on the split of how much it is health and how much of it is industrial related? This is the first question. Uh, Secondly, uh, what other projects like the one that the competitor Mari is working on with GCIL, are you engaged in or planning to engage in certain kinds of projects like these where you could have some growth avenues, or maybe if not these, the point is that you guys have now deleveraged almost, and you've paid off your long term liabilities, so you are in a very good position uh, to pursue growth prospects. But given that your existing plant is underutilized, growing in this area would not make sense. So is management seriously considering other growth avenues on this side? This is the second question. The third question is, uh, in the last the performance in the last year is exceptional, which was obviously marred by one-offs. In the first quarter, that's a true reflection of the earnings potential that has come out, excluding one-offs. So if you look at it, that the first quarter EPS is around 8 rupees, and if I'm not asking you any numbers, but if you extrapolate it to the full year, it comes out to 32 rupees in earnings per share, approx. This is basically showing that Pakistan Oxygen is trading at one of the lowest price to earnings multiple in its history. Uh, the 5, 10, and 15-year average of the price to earnings multiples, or the PE ratio of Pakistan Oxygen, is 20 and 21 times price to earning. Given the best ever results that you have posted and the best ever position probably in the last 2 decades that the company is in terms of profitability and in terms of the margin, the price to earning multiples, which is one of the key barometers for the minority shareholders, has maybe shrunk to uh, at the lowest level in the last 15 years. Uh, do you have in mind what why the company has not been able to create shareholder value despite reporting such phenomenal results. So this is more of an observation. And the last thing is that the traded value has shrunk quite a bit in over the last few months and the years. Is the management considering a stock split because the bid offer ask spread is increased too much on that side? So this is it basically.
Thank you, Zubair. Again, I will remind all our participants that we are limited by you know regulations as to what we can share and what we don't. So, our auditors have also recommended that we stick to our published results. So whatever is not there in published results in terms of our segments, we will be sort of precluded from sharing. So that is something we just want to highlight immediately. But I can definitely say that within both our segments of industrial and medical gases, uh, we're in a very solid position, and I think that in itself for our analysts should remain something that we will not take forward. As far as the other projects are concerned, you're very correct that the company is um, ready and poised to take make use of our balance sheet. However, again, these things are not in any way or form ready to be disclosed as yet, because any company, any management team will always be striving to grow our top and bottom lines through a number of these projects. However, our directors have very clear guidelines as to what we do share with our stakeholders. And unless something is signed off, so when we signed off finally our hydrogen expansion, only then did we come to the market and disclose it. We are not in the habit of, anytime we discuss anything, even or a cup of tea, of making an announcement about it. So again, these are things we will keep to ourselves till they're ready and ready to be shared. Um, as far as the plant utilization is concerned, I can just tell you one thing which is very critical for understanding. I think the business is such, and that this will be relevant for all participants, Vaisam, is that uh, the plant is built to uh, any future needs that are there. We don't want to produce a plant that today is 100% utilized, and then wherever because these plants take years and years from inception to production. So the strategy that we've used, or that the management has employed, is to build for the future. So whenever there is any expansion in the market in terms of need, you will see that we will not then need to go back and start to build plants, whatever industries we operate in the industrial segment. Whenever there's revival there, whenever there's economic activity, Pakistan Oxygen is poised with all of its capacity to utilize that. So that utilization part is something that we are well aware of, and I think we have done that on purpose. This is a conscious decision by the leadership to build so that whenever there is requirement, we are ready with it, and we'll obviously be benefiting from our efficient plant start design and structure. To answer your question about the P's, Vaisa, this is a little bit outside the ambit of management, because you see, we deliver the results. The pricing is something that the management or even the company itself does not have any direct contribution to. The the earnings is something we've discussed. The price is a factor driven by various other things, including the question about share split. These are things that are very sort of critical to our shareholders. If there is anything that is thought of, you will hear about it. But today, I'm sorry, but I don't think I can say anything more on that. The traded value or the number of shares that have decreased is not something that the management of the company has any rights over or any influence over. We will continue, as I said before, to strive to deliver our results as much as possible. But all of these things related to our trading volumes and our price to equity will remain to be seen in the future.
Thank you.
Thank you, Ji. Any more questions? Further typed questions. I think there's a typed question. Can you repeat the question? Can you read out the question, please?
First question is this: Is the
Hi, please.
Is the revenue of Quick App reflected in the Park Oxy financial reports? What percentage of the total revenue is contributed by Quick App, and what is the margin profile of this segment?
Okay. So I can answer the first one, which is yes, it is reflected in our others segment. Till it becomes, so we have accounting standards that govern what classifies as a separate segment. When we hit that part, we'll be able to disclose that, because again, this is something that we have highlighted to all our stakeholders as innovation and as something which is very different from our conventional segments. But we'll only be able to answer the margins and related segment questions once we become significant enough, please.
Second. Another question is, what is the run rate effective tax rate from here? Back to normal, or does the super tax band keep it nearer the current highs like the implied percentage in the Q1 FY26 numbers? And is there any residual deferred tax exposure left from that judgment?
No. So this is where I think I can very proudly say that we follow a very conservative and a very open and transparent tax methodology. Our leadership and our owners and our management have all aligned on the fact that, for whenever it comes to tax, we don't want to hide anything away. So we expect our tax to follow the, what you see in the Q1. That's probably a correct reflection of our
39%.
Which includes our. So if there's any reduction in our super tax with the upcoming budget, etc., but there's nothing left over. So to answer your apprehensions, while we know that other companies across segments, not just in our segment, may have taken different views on it, and whenever they finally get down to recording the correct numbers, you may see corrections in that. However, Pakistan Oxygen, although it seemed like a big hit at that time, we did that on purpose so that we have future secured in this case. Any other questions?
Yes, another question from Ikraj Azam from AKD. Can you explain Quick App's revenue contribution monetization model?
We've answered that.
And from Talha Ganatra, please share the reason for higher GP margin year on year in first quarter. How sustainable is this margin considering higher energy prices going forward?
Okay. So again, Talha Saab, the answer to that question is that our business is such that for our gases business, the majority of our cost is, of course, power related. So we have benefited from the reduction in our power rates in 2025, and that volatility does remain a factor in the industry. However, through our measures that we have put into place, utilizing our balance sheet strength, we are now very strongly looking at alternate energy as a backup source to manage our input cost. On top of that, one more thing that's reflected in the results is the efficiency. As I mentioned, this plant is German, and the efficiency is reflective of the quality and also our own engineering prowess, which provides us the best SPC I can say with some authority in the country on this. And finally, the pricing is definitely something that we cannot predict, because there are in the segments that we operate in, some of this is also carried forward. So when we in if a few years ago, when there were significant increases in power rates due to the long term contracts that we had in place in our healthcare segment, we were not able to pass them on, and at that point you saw our profitability under stress. However, now that whenever these contracts came up for a renewal, thanks to our, again, quality and what we offer, we were able to pass on our cost impact. So I think sustainability of this remains to be seen. We are optimistic in terms of our own abilities. However, there are a lot of external factors that I can't comment on, that we can't comment on. So if prices go up, whether we'll be able to pass them on or not remains to be seen.
Assalamualaikum.
Ji,
Sir, I have few questions. First of all, my question is regarding on your first quarter result, where sales shows a 23% growth, whereas cost of sales only increases by 4%. That's why your gross margin increases from 34% to 44%. So
Ji.
what was the actual reason? And
Ji,
my second
iske-
question is. And my second question is, what is the fuel mix of the company, and what is the requirement in megawatt? And third, please share us about the product mix of oxygen, nitrogen, and the liquid argon in terms of sales.
जी जी, देखिए, वो जो ये वाला लास्ट क्वेश्चन है, तो आपके अलावा और लोगों ने पूछा है. एज आई सेड, वी आर लिमिटेड इन व्हाट वी कैन शेयर, बिकॉज ये जो है ना, ये अभी तक हमारे डिस्क्लोज नंबर्स में नहीं आता. जब ये आएगा तो वी विल शेयर दैट विद यू एज वेल. Where the profitability is concerned, sorry, where the profitability is concerned, Akhil साहब, जो दो मेन फैक्टर है, सबसे बड़ा हमारा कॉस्ट का एलिमेंट होता ही बिजली के बिल्स हैं. सो आवर पावर कॉस्ट हैव गॉन have decreased year on year. Our pricing, as I said, in 2024, a number of prices had were coming from 23 to 24. Now in the and then so on and so forth. In 26, we have the benefit of our new pricing that we have, because a lot of these hospitals follow the government fiscal year, July to June. So the new negotiated prices are then reflected, whereas these were not there in the 24-25 time. And then finally, and most importantly, what we keep on mentioning is our own efficiencies. Our plant is, now that it's there, it has best SPC in the country, and that is what is then reflecting. So our costs have not really increased by the same level as our revenues, and that's what's reflected in the margin. Any further questions? Right. Thank you very much, ladies and gentlemen. We will call this meeting to a close.
One question.
Power requirement.
15 megawatt.
What is the power requirement of Pak Oxy? What are the current power sources that are being used?
Okay. So again, across Pakistan, we have two. Again, if I stick to first our ASUs, the Karachi ASU has a peak power requirement of about 10 megawatts, and we will be substituting about 30% of it eventually by alternate energies. Again, these are not. We will still require grid, because the peak load is not manageable unless there is significant improvement in our efficiencies. But we will be able to sort of bring down our requirements as we move forward.
Jamshed, Can I ask one question if you don't
Yes,
mind?
please.
Okay. Given the, I'm not seeking any kind of a forward guidance, but given the volatility in earnings that we have seen over the last few years, when you install the new plant, and
Hmm.
with the high finance cost and the high capex and interest rate environment of north of 20%, so the
Hmm.
earnings and the bottom line numbers remain depressed for over years. And in the last quarter also, last quarter of the last calendar year, there was a one-off on the tax measures. So,
Hmm.
barring any unforeseen events, can we assume that the number for the first quarter is a baseline for future, or should we expect some improvement, or should we see that the numbers would hover around those levels?
Vaisa, as I said, we have we are very limited. We are very limited in what we can say about the future. What I can do for your benefit and for the benefit of others is sort of explain a bit in more detail what has happened in the past. And I think you also touched upon that quite accurately, that the depression in earnings that you saw was actually during the period when the company was simultaneously investing heavily in our ASU, which now we're benefiting from. That coincided with multiple factors. There was, simultaneously a very quick and sharp decline in the value of the Pakistan rupee, and all of our, imports became very, very expensive. At the same time, the company which had entered into long-term borrowing to finance these expansions was also subject to very high interest rates. So that is, and then what we referred to earlier also was some of the top line, but some of the gross profit challenges. So when our cost of production vis-a-vis our electricity prices were increasing, we were not able to pass on a lot of these to our customers wherever we had long-term contracts. So this is where you saw the dip. Now the recovery came from both our ability to pass on prices, our improved efficiencies from our new plant, the reduction in the power cost, our overall efficiency in running our top and bottom line, and finally our ability to our improved balance sheet to pay off our debt. So that is what you see now. The future remains, we're optimistic, is all I can say. The company is well managed, well led. There's there's no skeleton in the closet. Everything is transparent. So that's all I can say at the moment. Fahad Saab, you have a question?
अस्सलाम वालेकुम, मेरी आवाज़ आ रही है?
जी प्लीज.
जी, मेरा क्वेश्चन है ऑन द नोवा केयर ने अपने एक पोस्ट लगाया था रिगार्डिंग पाक ऑक्सी के साथ। आई थिंक उन्होंने एक मेडिकल प्लांट रूम बनाया है। तो इस टाइप की
जी.
एग्रीमेंट में आई वांटेड टू अंडरस्टैंड इफ इट्स अ वन टाइम बिल्ड आउट एंड द ओनरशिप ट्रांसफर्स टू द हॉस्पिटल, या कोई
जी.
कंटिन्यूअस या रिकरिंग एग्रीमेंट भी होता है फॉर पाक ऑक्सी।
देखिए, मैं आपको जनरली बता देता हूँ। होता, मैंने आपको पहले थोड़ा सा टच अपॉन किया था, जब भी कोई नया हॉस्पिटल पाकिस्तान में, कोई बड़ा या कोई हाई क्वालिटी हॉस्पिटल या ऐसा कोई इदारा बनता है ना, so that is where Pakistan Oxygen's legacy come into, because we are the only organization with that 90-year history of expertise and delivering these kind of projects for पाकिस्तान के एंड टू एंड हिस्ट्री में। जो बड़ा प्रोजेक्ट आपने लगा होगा, कहीं भी आप जाएंगे आपको पाकिस्तान ऑक्सीजन के टैंक्स नजर आएंगे। तो वो होता इसी तरह से है कि पहला जो इसका फैक्ट होता है ना, जब कोई हॉस्पिटल डिजाइन फेज में होता है, तो वो कंपनीज को अप्रोच करते हैं। जैसा नोवा केयर का आपने जिक्र किया, तो नोवा केयर स्टेट ऑफ द आर्ट हॉस्पिटल बना रहे हैं, तो वो हमारे पास ही आएंगे, हम उनको पूरा डिजाइन करके देंगे। वो इक्विपमेंट फिर वो ऑब्वियसली हमसे खरीद लेते हैं, और उसका इक्विपमेंट जो भी हम उनको बेचते हैं वो हमारे रिजल्ट्स में रिफ्लेक्ट हो जाएगा एज उसकी बिलिंग कंप्लीट होती रहती है। सो फ्रॉम द इंसेप्शन ऑफ द प्रोजेक्ट, जिसमें कुछ पहले रेवेन्यूज आते हैं डिजाइन वगैरह के, और फिर फाइनली इक्विपमेंट सेल्स। लेकिन in a number of these cases, this also then becomes an ongoing revenue, क्योंकि फिर आप जो है वहाँ पे हॉस्पिटल्स पे देखते होंगे कि बड़े टैंक्स लगे होते हैं, तो जो भी उसका सप्लायर होता है, whether it's us or any other, then we can also become the supplier of choice for medical gases. तो वहां से फिर वो भी हमारे रिजल्ट्स में रिफ्लेक्ट होता रहेगा.
All right, thank you.
Thank you.
Another question from Ikram Masood. My question is regarding the ship dismantling industry. It
Ji.
was previously assumed that the revamp of the ship dismantling industry would contribute to industrial gas companies' revenues. Is there any update on the revamp on the Gidani shipbreaking yard? Has Pakistan Oxygen Limited generated any revenue from this segment so far, or does the company plan to benefit from it in the future?
नहीं, देखिए, again, when you say benefit is a very sort of open-ended word. So, we are servicing, हमारी books में भी लिखा है, we are servicing the steel industry and the shipbreaking industry as part of our customer base. Some of this is also geographical benefit. The industry is based in the south of the country where we have our plant. So whenever there's any revival in the industry vis-a-vis shipbreaking, we are poised and we are ready with our capacity to service this. The industry itself, although it's not directly in our ambit, I can give you a very high level feedback on this, which is that the government has put a lot of focus on reviving shipbreaking, and with that in mind, they have instructed the shipbreakers to become compliant to the standards that are required to reinitiate the industry. We have certain benefits. Pakistan has certain benefits against its competitors vis-a-vis our tidal difference. So, the Gadani area is much more efficient in like with like circumstances between us, India, and Bangladesh. So if we can become compliant, if Pakistani shipbreakers can become compliant, we will definitely have an advantage over our regional counterparts. And at the same time, whenever this happens, it's not something in our direct control. We will definitely be poised to benefit from this.
One question is that please share kilowatt per ton requirements or currently power mix of the company. Power mix of the company, how the company is generating.
Again, these are not numbers that we have. Again, we have every number, but the only issue is that we have been asked, not you have asked, my team has asked me, so we need to pass that question and just,
That's all for
that's all. Ji, thank you very much, ladies and gentlemen. Thank you for your time. Thank you.